Thank you for joining this land rent webinar this morning. I am Nathan Hulinsky with the University of Minnesota Extension, and this webinar today will focus on land rental rates, and we'll focus specifically in Southwest Minnesota, kind of Pipestone and Murray County are where I'm going to focus with most of my examples today. I'm out of Brainerd. My contact information is on the screen in front of everyone. And then also in the handout that was emailed, both my email and phone number are listed. Email is the easiest way to get a hold of me because I am on the road some and I'm just not in the office every single day. This is a quick agenda of what we're going to be going over in the next about hour, probably a little under an hour and a half here on farmland rental rate trends. We'll look at some crop budgets. We have some fin bin data. We'll walk through some land values. We have worksheets for both the landowner and the farmer. We'll talk briefly about flex rent and then just negotiations, kind of wrapping up our talk. So I'll highlight some helpful resources moving forward throughout this whole workshop. And the first great resource that we have is the University of Minnesota Extension's website. So you can see the website's URLs on the page here. And this is what it looks like. If you go to our website and click on farmland rental rates, it'll bring up this box. And then if you select cropland rental rates, it'll pull down the last 3-year averages for both the FinBin database and the USDA numbers. So the county average numbers are easy to find on our website. So hopefully that is what most people are looking for. We have two main resources for county-specific land rental rates. And the first one here is the Center for Farm Financial Management, which is a department within the University of Minnesota. And they collect this land rental information through the FinBin database. The FinBin database collects their data directly from farms who are enrolled in a farm business management program. In Southwest Minnesota, there's a university-run farm business management program that helps collect data and helps farmers with record keeping. And to be in that database or to be a part of that service, your data is anonymously updated into this website. So this is specific to Southwest Minnesota. Again, in the handout that everybody has, we have statewide data. So if you have farmland in a different part of the state, the handout is very helpful. The information on the screen here is specific to Southwest Minnesota. So I'll pick on Pipestone County. So we can see in Pipestone County, the average land rental rate in the FinBin database was 212. So that's dollars per acre on dry land, cropland for 2021, $212 per acre per year. In 2022, it jumped up a little bit there to 219. Into 2023, it jumped a stronger percentage there. It's like a 7% increase into 2023 to $238. And then into 2024, you can see our FinBin database has it at $231 per acre. So a slight decrease, about a 2% decrease from 23 into 2024. We can see the median number, so that's just the number in the middle from low to high, is at $219. The 10th percentile, so that's kind of the bottom 10% of land rental rates in the county of Pipestone, is $146 per acre. And the top 10% there's $313. So that's kind of the range we're seeing within Pipestone County. We can see the average data there from the USDA in the far side of the screen. In 2024, the average USDA land rent was $217. So almost identical to the median number of the Finbin database, but they're typically very close. The USDA collects their data. They do surveys to farmers. So they send out surveys every single year to farmers. And then depending on their responses, they collect the data and compile a county average number. And then with that, they have their county committees review it, go through it, and kind of put their stamp of approval on it, and then publish it. You can see there's a handful of counties that don't have much data. Like Rock County doesn't have a USDA 24 number. That simply means they did not get enough survey responses to feel confident in publishing that data. And also, Rock County doesn't have much data in the Finbin database. And that simply means that there weren't enough farmers in that one county through that farm business management program to publish the data. So on the USDA side of things in Pipestone County, 24 average was $217 per acre. Into 2025, it actually dropped a little bit there, another about 2% to $213 per acre. So for Pipestone County specifically, it kind of maxed out in 23, slight decreases both into 2024 and into 2025, according to the data that's published on the screen. You can look at some other counties. I'll pick on Murray County, a similar trend line, 242 in 2021, jumped up 10% into 2022, similar increase to 293 in 2023, and then a pretty big drop into 2024 through the Finbin database. They're at $267 per acre. So a pretty strong drop from 23 into 2024. And if we look at the far end of the table, the USDA average rental rate for Murray County in 2025 is $247 an acre. So there has been a little bit of a downward trend here on land rental rates just the last couple years. And this is a summary. So we're Southwest Minnesota focusing today. And we can see from 2020 into 2024, Southwest Minnesota land rental rates jumped 22% over that 5-year period. So from 2020 into 24, that 22% increase, pretty strong increases. From 2023 into 2024, however, in Southwest, we dropped about 3%. And the examples I showed from the previous slide indicated that. And then the state as a whole at the bottom of this table, a 21% increase from 2020 into 2024, a decrease of about 1% from 23 to 2024. So that's the trends that we've been seeing the last couple of years. And I'll highlight why land rental rates are starting to drop the last year or two. Mostly it's driven by corn and soybean prices, and I have some data highlighting what that looks like. This is pasture rent. So I get a few questions on what pasture rent is. Pasture rent gets a little bit more complicated than cropland rent because there's a little more variables in terms of who's maintaining the fences, who's supplying water, who's watching the animals if there's an issue. Sometimes it's a landowner, sometimes it's the cattle owner, the farmer. So there's a little bit more of a discrepancy. Typically with cropland rental rates, the landowner pretty much gets their check every year and has no involvement with the farming decision making or crop responsibilities. And we can see this is USDA data, and in Pipestone County it's about 61 to 63 to $67. This is per acre. Most farmers who I talk with who rent pasture ground rent on an animal basis. So if you bring in 20 animals or 30 cow-calf pairs, that's how they determine the rental rate, and it's not really on a per acre basis as is published by the USDA. I have more pasture data. I typically don't get a lot of pasture rental questions. Primarily, they're geared towards cropland. So here are some budgets. So I made these budgets using the Finbin database that I've highlighted a couple times. And this is a corn budget. So at the top of the page, we have the average cost of production. So you can see in 2020, it cost farmers about 3.25 to grow 1 bushel of corn. Okay, it jumped, 80 cents into 2021, 60 cents on top of that into 2022, another 20 cents on top of that for their cost of production into 23, a slight decrease there into 2024. But from 2020 to 2024, our cost of production has jumped $1.50. I mean, that's like a 40% increase on their on their transaction or on their cost of production. Question in the chat box here: does your information throw out family rental rates? Uh, Typically yes, but some of those do fall through the cracks. But we do try to keep this data at an arm's length transaction, because if you're renting from your dad or from your grandma, typically you're going to get a below average price point because family's nice to you. So we do try to weed out that information, but there's no guarantee that 100% of those transactions are not included. Sometimes it's challenging too, but we try to make this very market average applicable. So back to our screen here, you can see their average yield over the last 5 years is right around 200 bushel corn. 2024, we had about a 10% reduction on yield there, only getting about 173 bushels per acre. I think we had some too much rain issues in 2024. You can see the average price received just over $5 for the 5-year average. Last year, just under 4.5. My projection next year is $4 corn. You can see the list of expenses. I'm not going to go through them in great detail, but you can see all of the expenses that farmers pay. This is all per acre. I'll jump to the bottom. This is their net income. So the net income, the blue line towards the bottom, that's what farmers make per acre at the end of the day. The 5-year average is $200 per acre. So that's a pretty strong income. I'd say the long-term average is probably only about a $50 profit per acre. So that 5-year average is heavily influenced by 2021 and 2022, where you had well above average incomes, and I have some slides showing that. In 2024, however, instead of $200 profit, parentheses means negative, and we actually had a $32 per acre loss on corn ground. Right, we had below average yields and below average price compared to the 5-year average, and our incomes were negative. So there was a net loss for corn ground per acre. This is my projected budget moving forward into 2026. I have 200 bushel corn, so kind of right around trend year average, $4 corn price. Same list of expenses here. And then we can see towards the bottom, I have a $58 per acre loss. So again, my corn budget next year for farmers is negative. Question in here about miscellaneous income. That miscellaneous income at the top line, that does include crop insurance revenue. That also includes some of the governmental payments that are various happens throughout the year. And then like on corn, if we're selling corn stocks, that's a miscellaneous income not under the price and yield. So it includes multiple things. Um, and then that farmers time, I have that calculated throughout their net income. So we expect their net income to capture that $50 per acre labor and management charge to run the farm. And I'll highlight some of those points a little bit stronger in the next few slides. Soybeans, same budget here. You can see that my cost of production, $7.55 in 2020. It jumped $2 into 2021 at $9.62. So a crazy increase in the cost of production just in 1 year. Another $2 increase into 2022, a small increase into 2023, but from 2020 to 2023, the average cost of production jumped $4 per bushel. That's a tremendous increase in costs. In 2024, a slight decrease, about a 50-cent drop from 23, but still at 11 and a quarter is their average cost of production. You can see your average yields and price. 5-year average is 55 bushels an acre with $12 a bushel. Last year, slightly below average yields, and then a little under $10 on price. You can see the list of expenses: seed, fertilizer, chemicals, insurance. All those expenses are thrown in there. And then the net income at the bottom line there. Average net income there over the last 5 years is $124 per acre. So again, the long-term average is about $50 per acre for farmer labor and management income. Last year, again, with that below average yields, farmers lost about $54 per acre. And the data in this slide is specific to Southwest Minnesota, not state averages. This is Southwest Minnesota specific. And then my projection into next year is a loss of $16 per acre. So again, my crop budgets, both corn and soybean, are negative for 2026. So I talked about how land rent has decreased on average the last couple years. I do see that trend continuing because of our negative rates of returns on the farmers side of things. This is a breakdown on state average, Minnesota state average crop farm income. So this is the median income on crop farms across the state of Minnesota. And you can see the highs and lows. We've had big swings over the last 20 years on farm income. You can see, back in 2004, the red line is inflation adjusted. Farmers were getting $70,000 of income. Right? That's, I think, a somewhat average American household income. And you can see we had this big run up in income from 2007 through 2012. 2012, the median crop farm income was close to $350,000, humongous income. And then it dropped pretty significantly from 2013 through 2019. The median farm income there was below $50,000. So that's below the American family average income. So not strong incomes, right? Pretty low incomes for that period. Starting in 2020, we had this kind of increase in income. 21 and 2022, really high incomes. Yet again, we can see both of those years, inflation adjusted dollars there are around, $200,000 to $250,000 of income for that 2-year period of 2021 and 2022. Dropped significantly into 2023, about $50,000 of income on the farm. And then into 2024, even a bigger drop, and the average farm income there is about $2,400. So unfortunately, 2024 is our lowest farm income on the crop side of things over the last 20-year period, as we can see on the table. So farm incomes are below average. Unfortunately, 2025 is going to be looking very similar to 2024. We did have stronger yields on average across the state in 2025 that might bring our incomes up a little bit from 24, but not going to be looking like 21 or 2022 in terms of income that we can see on this table. And this is kind of the same data, but this is a breakdown of price received, that's the black line, and the blue line is average cost of production. This is specific to Southwest Minnesota, but you can see that kind of 2012 period, there's a large gap between what farmers were getting paid, the black line, from their cost of production. So that gap is profit on the farm. So you can see in 2012, farms were making, over $1 per bushel in terms of income. So that's a very strong income number. And then again, through that 2014 to 2020, very minimal incomes, right? The blue line and black line are pretty much identical, where farmers are selling at their cost of production. They're breaking even, not really making strong incomes. Again, that trend reversed starting in 2020 and then into 2021 and 2022. Farmers were making, again, over $1 per bushel there for a couple years. Strong incomes. Unfortunately, in 2024, that's all vanished. Same graph here, but just with soybeans. And you can see again that 2008 through 2012, there is some distance there where farms made some decent income. from 2014 through 2020, selling at the cost of production, not a lot of income. Soybeans wasn't as profitable in that 2021 and 2022 time period as corn was, but in 2024, pretty much no income on the farm there on soybeans. So that's what we've seen for farmer profits the last few years. And this is USDA data, Minnesota specific, but what are farmers getting the price received? So the top line just happens to be 2023, where farmers on average were selling 650 corn the whole first 6 months of the year. Then it started to drop kind of as summer progressed, and then we ended the year right at $5 corn. Again, above their cost of production. That's a profitable level. But the red line in the middle of 2024 just continued to decrease, right? There's no overlap between the 2023 price received and 2024. And then in 2025, kind of continuing on the same trend line there of the 24 prices, but we're at $4 corn. Same data here for soybeans. And again, you can see it's even more, stark just in terms of the difference year over year. Top line of 2023, we're at $14 soybeans, $15 soybeans for a little bit there in February of 2023. The red line is 2024. We start the year at $13 soybeans and end the year at $10 soybeans. The yellow line at the bottom is again just highlighting our 2025 price received is below anything that we got is in the farming world from 2024 or 2023. This is the same data just extended over multiple years. Again, highlighting that high income starting in late 2020. We had this big run up in prices, but then those prices came down pretty much as quick as they came up. We had 2 years, especially, 2021, 2022 high income. 23, they started coming down, and 24, incomes were really low. Farmers have two main safety net tools that they can utilize. And the one big one is crop insurance. So I think most of us are familiar with roughly what crop insurance is. Farmers can elect what percent coverage to use. The higher the coverage level, the more expensive it is, right? The higher premiums they pay. It's run through indirectly through the USDA. The USDA sets a lot of these prices and the parameters that go with it, but the price is set nationally, and then the yield is individual farmers' yields. So the price nationally, they don't care what Farmer John in Pipestone got for corn. It's a national set price. And the way crop insurance works, they have a spring price and a fall price. It's based on December or November futures based in February or October. And crop insurance, if there were to be an indemnity paid out to farmers, will pay out on the higher of these two. So 470 was the spring price on corn, 1054 spring price on soybeans, and you can see the fall price was both below that. This is just the last 10 years of crop insurance prices on the screen. It does fluctuate whether the spring or fall price is higher. It changes year over year. But roughly 90 to 95% of all corn and soybean acres in the Midwest do have crop insurance. So it's a very widely used tool. The other safety net that does exist for farmers is the Farm Bill. So the Farm Bill is a program where farmers choose between ARC County, so it's a revenue-based tool, county-specific, or a price loss coverage tool of PLC. PLC has paid out nothing the last few years, so PLC has not kicked in. There's preset formulas whether or not these payments will be issued, and under PLC, there has been no payments the last few years. These payments on the screen are for crop year 2024, so it was harvested a year ago, but these payments just got issued, and some of these haven't even been issued yet with the government shutdown, but these will be issued in the next few weeks. So we can see canola, not a widely grown crop, but we can see there's a few counties, mostly to the north of you guys. Redwood County is relatively your neck of the woods. canola payment. Oats payments, again, a few counties are getting some payments. Sunflower seed, they're kind of in the middle of my table. Almost all of those are well north of you guys. Wheat payments. There were some decent wheat payments on the screen here. So wheat payments, we can see this is all the state of Minnesota that got payments. There's a question specifically on McLeod County. They did not get a wheat payment or an oats or canola or sunflower payment. Um, I'm trying to find Pipestone County looks like got a $31 wheat payment. And these pay out on base acres that farmers have, not on planted acres. And they only pay out on 85% of base acres. So if you have 100 acres of base, 100 base acres of wheat in Pipestone County, and you get a payment of $31.66, you will get paid out on 85 of those acres, not 100. It's just the way the program is set up. You can see Murray County is getting a $30 wheat payment as well. This is corn. So corn, there are some pretty strong payments across the state of Minnesota, and I'll pick on um, if the county's not listed, it means that it don't get a payment. So if Pipestone is not listed, it means that they simply didn't get a payment. I don't see it on here. There are some strong payments. You can see McLeod County. There's a question on McLeod County, $99.54 payment. So it's a very large payment. That's the maximum payment allowed for the county. So we have some strong payments coming out here, especially on corn. Question on getting these screens. If you want these specific data, send me an email. I can share this out. I don't have it in the handout, but if you want it, send me an email. I will share. I will send it to you. I'm just looking at Murray County. In Murray County, $89 per acre on corn. So again, some pretty strong payments are coming out, especially on corn. I'll pick on Jackson County is very close to you guys. 93.77. Again, almost a $94 per acre on base acres. Some counties do break down between irrigated and non-irrigated, so that there are separate payments. So these payments listed are for crop year 2024. We had some drown out concerns below average yields, and that's why these payments are as large as they are, is that we had too much rain. For crop year 2024, these payments have not been issued yet. They will get paid out to farmers from the USDA in the next couple weeks. I was on a call yesterday with FSA, and they just got back in the offices, a week and a half ago. They are trying to get caught up on everything. They got a backlog of stuff. These will get paid out in the next couple weeks. This is corn. This is soybeans. Again, pretty strong payments coming out. So I'll pick on Pipestone County gets a $41 payment on soybeans. Again, these are paid out on base acres, but still $41 is a pretty strong payment. I'll pick on Murray County, $59 per acre for Murray County on soybeans. So there might be some strong payments coming out here to farmers in terms of total dollar amounts that are coming out. Any other questions on these payments? There's been a few in the chat here. I've tried to address them. Again, these are for 2024 crop year, but the payments are just coming out here the 1st of December, roughly. And this is a map put together by the University of Illinois. And you can see this is the whole nation. Kind of south central Minnesota is the largest cluster of a darker counties. And the darker the county on the map here, the higher the Arc County corn payment. So again, Minnesota has, I was looking at the total payouts, and Minnesota was like roughly 1/3 of all payments from the Farm Bill here were for Minnesota. And you can see that, right? Iowa, Illinois, Indiana, Missouri, pretty much no payments are issued on corn, right? White means no payments. This is the same table here. This is just for soybeans. And you can see the gray counties off to the west, like the whole western third of the country, they don't grow soybeans. So they don't even have data. The white means no payments. Again, central, south central Minnesota, kind of the biggest cluster of the darker shaded counties of higher payments. You can see Iowa, very limited payments. Illinois and Indiana, very limited payments there as well. And you can see North, South Dakota, very limited payments, especially North Dakota, pretty much none. So those are farm bill payments. Those do get paid out directly to the farmers and not the landowners. From the USDA's point of view, the farmer takes the risk. They are the ones getting the payment, not the landowners. I get that question quite often, but these payments are going to the farmers. This is just current cash prices. This is just at a Farmward co-op out of Morgan. I have no affiliation with this co-op, but they have prices easy to find. They're relatively southwest Minnesota. And you can see prices fluctuate between different elevators. Maybe there's a ethanol plant in your town and they have a little stronger basis and they pay 5-10 cents higher. You know Southwest Minnesota better than I do on the call, but these are roughly cash prices. November here, 370, 375 corn in December, 395 there for new crop 26. So into the future there, we don't even break $4 cash price um, in the next year. Soybeans on the bottom, 10 and a quarter. So that has moved up quite a bit. I've been tracking these prices the last couple months, and that's probably jumped $1 on soybeans in the last 2 months. So some upward movement, but still, I shared my budgets right away this morning. Our cost of production on soybeans, I said, was about 11 and a half. Still, our cash price is below that. One thing I want to highlight as well, if you as a landowner are renting ground to a beginning farmer is just 10 years or less of Schedule F income. Schedule F is just the tax form that farmers use to show farm income. Like just a simple citizen. I just file a 1040 for tax reasons. Farmers throw their income on Schedule F. If you rent to a beginning farmer, you can see that cash lease at the top. 10% of that can be taken as a tax credit that goes to the landowner. So there's incentives from the state of Minnesota to rent to beginning farmers. So you can see the max allotment there is $7,000, but that would be a 70,000 land rental contract. So that's not a small contract that would happen there. But if you're curious, the website's on here. If you simply do a computer search, internet search on Minnesota beginning farmer tax credit, this will come up. The website's fairly easy to see. You can see the application due dates are actually from last year. This screenshot was taken yesterday. These will open the first week of January for the year 2026. And it is a first come, first served basis. So if you sign your contract and go in here come, July 1st, the dollar allotment might be used up already. I know last year these were burned up really quickly, like come March 15th, all the money was used for the year. Legislature, I have appropriated X amount of dollars to this fund, and once it's burned up, it's gone. It's not a ever open pool. All right, so just highlighting some more FinBin data here, kind of what FinBin can be used for and what we can look from it. This is what the FinBin website looks like. It's just a screenshot. When I made those budgets, I simply did a crop summary report. I just want to highlight the usefulness of a benchmark report. This is a benchmark report. I know there's a ton of numbers on the screen here. It's kind of hard to follow, but we have all of these different expenses and income categories broken out in these 10% buckets where it's the bottom 10% all the way to the top 10%, just showing the ranges we see within the state of Minnesota. This particular screenshot is for the whole state of Minnesota. If you go into FinBin, you can create the same thing for a one, two, three county area. It's county specific data. So you can say, I want to look at Pipestone and Murray County. You can do that. So it's a very localized data, but we'll just pick at yield at the top. That's the top entry line. The bottom 10% of corn yield in 2024 was 115 bushels per acre. The top, excuse me, the top 10% is $232. So that's the range of yield on corn ground that we're seeing in Minnesota. And I'll pick on seed expense. The top 10% most expensive seed was $156 per acre. The bottom 10% on seed cost was $85 an acre. So there's a wide range and what farmers spend on these input costs per acre. And just jumping to the next screen here, the top line, that's farmer profit, right? Net return. So we have the bottom 10% of corn farms losing $330 per acre. Tremendous losses. The top 10% and the same calendar year in the same state made $226 per acre. So from high to low, that's a $500 difference between the highest profit, lowest profit farms in Minnesota. So there's a wide range, and that's why I highlight using this benchmark report. Where does your farm stack up? Right? Are you above average? Are you below average? Right? It's good to know as a farm manager on where you're at. And we can see the cost of production per bushel, 692 is the bottom 10%, the top 10%, 319. So this humongous range in input costs and incomes and losses on farms. This is specific to Southwest Minnesota, and you can see corn yield. We average right around 200 bushels per acre. 2024, a pretty decent reduction from average, only about 175 bushels per acre. Soybeans, same story. We typically average about 60 bushels an acre. 2024, we can see we had about a 10 bushel per acre reduction from our average. These are input costs. So this is a per acre basis, how much farmers are spending per acre. And you can see land rent is that green line at the top. Land rent is the most expensive input. For the last 5 years, land rent is the most expensive input per acre that farmers spend. The red line is fertilizer. So you can see that's kind of the second or third most expensive input. And then that brown line is machinery. Machinery costs have gotten more expensive on the farm. We can see that in the data set on the screen. Seed is the one, that dark red in the middle. The bottom two are chemicals and crop insurance. Same graph here with soybeans. And very clearly, land rent is the most expensive input, right? That green line is well above the next line there of machinery. That's below that in the screen. So land rent is an expensive input. It's a necessary input, but it is the most expensive that farmers pay on a per acre basis. Next, we'll switch gears here and we'll look at some land values. So I've been talking about land rental rates. That's a 1-year payment that farmers spend. Land values is what farm sells for when it changes ownership. And the University of Minnesota does collect this data. We can see this landeconomics.umn.edu is a website that shows it. And on the website, it breaks it down by township. So you can do very localized data. So this is 2024 numbers. So again, I'll kind of pick on Pipestone County. So in Pipestone County, there were 12 sales in 2024. This data will get updated here shortly for the 2025 data, but that calendar year isn't wrapped up just yet. But 12 farmland sales to be included here, it's a minimum of 20 acres. So we try to weed out those small parcels, and we do try to make sure these are arm's length transactions, and it's not, father selling to son or grandma to granddaughter. We try to weed that information out and make sure these are arm's length transactions. The average farmland sale in Pipestone County was 10,650 bucks in 2024. The minimum 8,500 per acre, the maximum there about 13,400 per acre. Okay, so that's the high to low range. And it is interesting. The average sale price in 2023 was $8,700. It jumped almost a full $2,000 per acre from 23 to 24. So a tremendous increase on average. I should double check the data set in Murray County if that number is supposed to be 8,100 instead of 800. That's a incredible low value. So that might just be a digit is displaced there. But you can see the average in Murray County, 9,100 bucks. The average in Lyon County, a little over 11,000. Nobles County, the average is over $12,000. So overall, most counties saw an increase in average land sale price from 23 to 24. Not all counties. Redwood County dropped 100 bucks on average. Cottonwood County at the top of the table dropped a full $2,000 per acre. So again, it looks like there was one really low sale there of 2,300 bucks. We don't have the information on was this parcel of ground tiled or irrigated? We simply have the number of acres and the price sold, so average price per acre. But it's a good starting point on what the average is for these various counties across Southwest Minnesota. The handout that I emailed everybody has this data for the entire state. The state of Minnesota does also collect this. This is where the data from the University of Minnesota does get collected as well. So if you want to get more up to date, this is updated roughly monthly, I'm told. But the Minnesota Electronic Certificate of Real Estate Values, that's what the website looks like. And you can say, hey, I want to look at Pipestone County for you can see you have to enter the beginning date and end date. I took the screenshot on 11/18, so that's why I defaulted that to the end date. And you can do, so if you want to look at this data, it's updated roughly monthly. You can see what it sells for. The U of M collected data only looked at cropland. This you can look at various types of land. If you're not looking specifically at farmland, it can be helpful. But check that out if you're curious. We did have a question about the CPI index. So there is a crop productivity index map. And this is the University of Minnesota collects this data. This is a University of Minnesota website that's on the screen here. It's a screenshot of it, and you can see it's a map. So you can hover around anywhere in Minnesota where there's some green to it, and it'll tell you the average crop productivity number. And it's a scale of 0 to 100. Typically, if that value is below 50, it's typically not farmland. So like it's going to be swampy or timberland where it's just not farmed. So typically anything over 50 would be farmed. And you can see, the Minnesota River Valley, South Central Minnesota, some of the darkest green in the entire map. And I think that's no surprise to anyone. They have a little more productive soils than other regions of the state. The more north and especially northeast Minnesota you get, a little lower values. I don't know the average value for the state, but if you check out this map on this website, it might have some more information for you. But it is kind of neat to say, hey, my ground is average 85, or my ground average for my parcel is 100, right? There are some hundreds on the map. I was looking at this last weekend. Again, a lot of good information on here on what soil productivity is. So I think check that out. If you can find the county average soil productivity, and you can say, hey, my parcel I'm renting out is above the county average. You can maybe use that as a way to dictate my farmland income should be above the county average. Or if the county average is 80 and your individual parcels is 75 CPI, you can say, hey, I'm below county average productivity. My land rent should reflect that. My land rent should be, 5-10% below the county average, whatever math you use to make that formula. This is just jumping back to Real estate values. This is nationwide, going back 75 years. So there's a lot of data in here. It's just one average dollar amount value per year for the whole nation. But if we follow that orange line, which is inflation adjusted, back in the 50s, you could buy farmland for 750 bucks. We can see it's increased over the last 75 years. So now that same parcel of land on average is 43.50. So we've had a pretty strong increase and farmland values the last, especially the last 20 years. So we can see from 1950 through 1975, slowly increased. That huge jump in prices into the late 70s, and then that huge drop in prices in the mid 80s. That was the farm financial crisis, right, of the mid 80s. Prices dropped. They were very flat through the mid 90s, slow increase kind of to the mid 2000s, and then starting with that higher income in that 2007 window, prices skyrocketed from 2007 through roughly 2015. And then prices were flat, slightly decreasing from 2015 to 2020. From 2020 to 2025, they've increased pretty substantially again. This is the same data, but this is just broken down what the average value is per state across the entire. I guess they really only have the lower 48 in the graph here, but there's not a whole lot of farming in either Hawaii or Alaska compared to some of the other states on the screen here. And I think it's important to look at the individual states' percent increase. And the percent increase is from 24 to 25. So it's a 1 year change. Minnesota farmland values have jumped 7% just in 1 year. So that's a pretty strong number. If we look at that, that's about the highest percent increase of any state on the whole map. It's like the top three. Utah, again, not a ton of farmland. Utah is a little bit goofier. When you get out west, there's so much federally owned land, the data gets a little bit variable. And farming is completely different in Utah compared to the Midwest here. But Michigan also has an 8% increase, but Minnesota, it's one of the highest increases from 24 in 2025 of any state in the union. So I think that's interesting. You see, like our neighboring states, North South Dakota, a 4% and a 6% increase. Nebraska, 4%. Kansas, 4%. Iowa, 5%. Wisconsin, 6%. In Illinois, 3%. Indiana, 4%. Minnesota, 7%. We're definitely above average in terms of our rate of increase. This is the same data, just broken down what the actual number is. So in 2021, the Minnesota average farmland value was 5,030 bucks. Fast forward in 2025, that's jumped to $7,000. So we've increased from $5,000 to $7,000 per acre just in the last 5 years. So in the last 5 years, we've increased our farmland value about 40%. So again, pretty strong increases, especially in this last 5 years. Again, the 5 year period before this was flat to even slightly negative, but the last 5 years, a big increase. I do want to highlight when we're looking at our farmland rental agreements to use actual county yields, right? It's really easy for farms to say, you know what, I get 220 bushel corn, I get 65 bushel soybeans. Well, let's look at what the actual county yields are. So again, Pipestone County, you can see this is the last 5 years. This is USDA yields. So these are USDA numbers. But Pipestone County, our average yields on corn the last 5 years is 176 bushels an acre. So again, to say that we get 200 bushel corn every year, the county is well below that. So I just want to make sure we're utilizing realistic yields that really do help go directing what our land rental rates are. You can see Murray County a little bit higher. Murray County's 5 year average is 192. We look at soybeans on the left hand or the right hand side of the screen. Murray County average soybean yield over the last 5 years, 51.302. We collect this to the 1,000th decimal point. I don't know why, but I find that interesting. And then in Pipestone County, we're getting 48 bushels per acre on average. So if we have farmers say, oh, I get 65 bushel soybeans, maybe 1 or 2 years, but the county average for the whole Southwest Minnesota is right around 50. So again, highlighting actual yields, I think, is important, right? A lot of times our yield is a big factor in determining what our land rental rate is. So the next worksheet we have here, we have some worksheets next. The first one is from the landowner's point of view. These are available on our website. And the first one here, landowner's point of view. What's the farm size? So this is simply how many acres we're renting out. I want to highlight, don't use how many acres we own, how many acres we're renting out. So in this example, we have 156 acres that the farmer is renting out. What's that value per acre? Right? We just talked about land values. They're anyway in Pipestone County from $8,000 to $12,000 per acre. So around $10,000, but there's some wiggle room. So determining what your actual farm is can be a little bit of a challenge. Total farm value. So again, multiplying value per acre and farm size. And then desired rate of return. So typically across the Midwest, farmland will rent out for about 2 to 2.5% of what its fair market value is. So on 10,000 acre cropland, that's 200 to 250 bucks that it'll rent out for. That's rough math of where it's going to be, but I do want to highlight owning farmland, you should get some rate of return on that investment, right? You could sell the farm and take that $1 million and put it in the stock market, maybe get a 7, 8% rate of return. You can put it in Bitcoin and lose all your money. You can put it in a savings account at a bank and get a 1 to 3% rate of return. Farmland is a safe investment in comparison to the stock market. There's less risk associated with it, less volatility, and typically safe assets get a lower rate of return. I do want to highlight real estate taxes. Real estate taxes vary quite a bit across the state of Minnesota. I would guess in Southwest Minnesota, 20 to 35 bucks an acre. It might vary on your township, your county, and your school district. Those all play big factors in what your real estate taxes are. But breaking that down on a per acre basis for the cropland. And then liability insurance, you might have some like umbrella policy on what the farm, just for liability reasons. Other cash costs, maybe you have to fix a fence, fix a culvert. You don't have to do these every single year, but maybe every 10 years you got to throw a few $100 at it to get something fixed. And then that row H, total desired rate of return. So adding in your investment return, adding in your real estate taxes, that's kind of the two big ones. Simply take that, divide by how many acres. So this example, we get $213 per acre. Another quick example, lower value on the farmland brings $115 expected or desired rental rate. So I think this worksheet is a good starting point for the landowner to come in and say, hey, I want my 2.5% rate of return. Where does that get me in terms of rental rate? And where is that in relationship to what I've got in the last year or two? I think it's a good starting point. The next two worksheets that we have here are geared towards the farmer's point of view. So not super helpful for the landowner to walk through, but this is what they are. The first one is highlighting how much the farmer can spend on land rent. And we put in how many acres. So 100 acres corn, 100 acres of soybeans in this example. Put in your expected yield and expected price. Putting down all of our input costs. So what is your seed, fertilizer, chemicals? What are all these individual costs per acre? Okay. And then what's your overhead expenses, right? And in this worksheet, we have the operator labor management return. That's the farmer's profit, right? That's the farmer's reason for running the farm business to make money to support their family. On average, it's about $50 per acre. But what are your overhead costs? What's your depreciation expense per acre? Adding all these numbers up, at the bottom of the worksheet, you can put in your total income minus expenses, divide by your acres that you're farming, and it'll tell you how much is available to cover land rent. So in this example, it's $106. So anything over that in terms of land rent is eating away from the farmer's profit. Anything less than that is increasing farmer's profit. I know this is just an example, but I think it's helpful for farmers to look at. This website, fairrent.umn.edu, is that same worksheet, just an online template that you can store and save your data and edit it without using, paper and pencil. So I check out the website. It's fairly easy to follow through. And in the website, once it gets you a final dollar amount, it'll tell you with a 5% increase or a 10% increase in either land rent, crop price, or yield, how that'll impact kind of your bottom line. And so it's a helpful tool, helpful website for farmers to use. The last worksheet I'll walk through here is cost of production. So acceptable price, break even point, cost of production, they all mean the same thing. And this is a worksheet to help do that. Very similar to that previous worksheet, put in how many acres. What's your expected yield, your expected price. Same list of expenses that we just walked through with the previous worksheet. What's your overhead expenses, right? What's your utility bill? What's the farmer's insurance bill? What about interest expense? And again, that depreciation. Adding all of this up. Also, the family living expense. So the previous worksheet just threw in $50 rate of return for the farmer. This one says, hey, if the family spends $90,000 and 60% of that's coming from the row crops, the farm needs to make $54,000 to support the family, right? That percent, not, some farms have off-farm income where the spouse has a job in town. Some farms don't. So that number is going to vary. I think there is a quote from the University of Minnesota just the other day. The average farm family living expense was right around $100,000. So unfortunately, it is not free to live in this world, and inflation has eaten away at some of our family living expenses or increased our expenses, throughout the last 5 years. So that would be 50, in this example, it's $54 an acre. Average family living costs are a little higher than that typically in Minnesota on our crop farms. So at the bottom of the worksheet, you take your total expenses, you look at your total expected income, divide by how many bushels, and you can get your cost of production. So in this example, we got $5 corn, $13 soybeans. So again, I think it's important for farmers to know their cost of production. So when they're selling their crop after harvest, they know if it's profitable or not. This website, cropcost.umn.edu, is that same worksheet, just an online template. And again, farms can save the data and utilize it moving forward and edit it. They can make up to like 10 or 12 plans in this website at one time. So you can say, hey, this field has a little higher expected yield, a little higher productivity. What's that can do to my cost of production, right? So I think it's important for farmers to know this. The next thing here is flexible lease agreements. So typically, farmers will pay landowners a cash payment that's predetermined for land rent. So I'll say $200 per acre. Farmers will pay $100 in the spring, $100 in the farm. End of story. A flexible lease agreement says that final land rental payment is flexible depending on if price and yield or any other component that you can agree upon. And if they're above average, land rent will increase. If they're below average price or yield, land rent will decrease. So instead of paying that $100 in the spring and $100 in the fall, farmers will pay $100 in the spring. That final fall payment will either be $80, $90, $100, or maybe it'll be upwards $110, $120, $130 per acre if price or yield are above average. That's the idea behind flexible lease. You can do it based on gross revenue, which is price times yield. You can do base rent plus a bonus where you say, hey, I'll do you $200 per acre. If things look really good at the end of the year, I'll give you an extra, 5, 10%, whatever you can agree on. Yield only, price only. There's different ways to do it. The complication that I've seen explaining this with farmers and landowners is what price to use. Where they say, you know what, we can do a 6 month rolling average on prices. But with that, what day, what price in the last 6 months do you use? I've had landowners tell me they use the crop insurance price. I dictated what that price was earlier on this morning, but determining the price does need to be or how to determine that price does need to be determined in advance. I had a farmer tell me a week ago that they had a flex rent agreement and they decided to use like December 1st price of corn at the local elevator. The farmer liked the price at 10:30 in the morning. The landowner wanted the price at 3:30 in the afternoon because there's a price swing. So again, you need to predetermine what price to use. That's the biggest hiccup with the flexible leases. I would say over the last few years and my conversations with the farmers and landowners, the straight cash rental agreement is just easier. They say, give me my $200 every year. I don't care if it's $5 less this year and $10 more next year. If you just give me my $200, for example, is easier. But flexible rent is most definitely an option. And historically, over the last 10 years, percent of gross revenue, 29% of gross revenue on corn ground goes to land rent, and on soybeans, it's 39%. So I have 150 bushels in here, for example, but 150 bushel corn at 350, that's $152 per acre land rent. On 40 bushel soybeans at $9, that's 140 bushel or $140 per acre land rent. And you can follow the math. Yields in the, Southwest Minnesota are going to be a little bit higher than my yields listed here, but the math follows the same. So that's what flex rent can look like. And it is an option for everyone to consider. I do also want to highlight a landowner. They can take a first lien position. So they'll take this lien on growing crops in the field on rented land. The amount of the lien is unpaid land rent for the year. So if the farmer pays 100% land rent in the springtime, there's no need to do this because there's no unpaid land rent. A lien would put that landlord in first position, potentially second position if the bank already has a loan out with the farmer for an input or an operating loan. This does need to be filed. It needs to be perfected. It's a UCC1 financing statement. If you've never done it before, you may want to get some legal assistance. You do need to file this within 30 days of the crops beginning to grow. You can't do this come September 1st because you don't think you'll get paid. I've had landowners tell me they file this lien every single year. It's relatively cheap. I believe it's under $50 to file it. And for peace of mind, they find it useful. I've had landowners tell me if I have trouble getting paid, I'm getting a different farmer to come in and I'm just not going to deal with it. So it's an option. I'd like to highlight it. If you want to know more, um, look into it, ask me questions. It is an option for everybody to do. I do recommend putting a lease into writing for legal clarity reasons. If you have a verbal lease and you have a dispute, who's right, who's wrong, right? It's really tough to know that. When it's in writing, both the landlord and renter understand the details. It's a lot easier to be outlined and reviewed. And it's a guide for heirs. I get phone calls every single year about, hey, my husband just passed away, or my parents passed away, and it's the children or the other spouse is now operating this rental lease. And they're like, I have no idea what's going on. Like, my husband or my parents dealt with it the last 10, 20 years, and now what? If the lease was in writing for them to look at, they have a better starting point. It should be signed and dated by both parties. These are some things to include. Name, address of the landowner and renter, legal description, the beginning and end date of the lease. How long is the lease? Rent details. What's the rent amount? Again, is it $200 per acre? Determining that. And then how much is the total cost? What are the due dates? Is it April 1 and November 1? Is it April 1 and May 1? What's the breakdown on the rent due dates? Payment type, is it cash? Is it check? Is it half a cow? Is it 2 cow? You know, what is the payment type? I've had farmers say, yeah, they pay the landowner in meat, right? They say, hey, here's half a cow. Well, that can be a very good situation. Just depends on what the landowner wants. What happens if that payment is late? If the payment's late, does that terminate the lease? Is there a penalty? It's a lot easier to have this discussion up front versus after the fact. Insurance, you know, typically the farmer's going to have crop insurance. The landowner may have some form of liability insurance. It's not a big, you know, discussion topic point, but things that may want to be thought through. End date, you know, the termination details. What's the notice requirement? Um, Farmers are going to want to know as soon as possible if they are not going to farm that field in the springtime. They're already buying their inputs now for next year's growing crops, right? They're buying the fertilizer, their crop chemicals, and their seeds right now for next year. If they bought inputs for your field that they anticipated planting, but then come May 1st, they're not planting, right? That puts the farmer in a pretty bad situation. That's not fair to the farmer to tell them very late. It's pretty common for these crop leases to have some form of like first right of refusal where that farmer can say, hey, I get first chance at this same field at the end of the lease. Or if another farmer comes in with a higher price, the original farmer say, I can either match it or not. I need first right of refusal. That's very common. Most leases are relatively short, where they're 1, 2, 3 years long. But it's very common for the same farmer to rent that same field for years on end. It's just they're renewing the lease quite frequently. And then amendments, disputes. What happens if we want to change something in the lease, you know, year two of a 3-year lease? How do we do that? Is it possible? Landowners' rights, the big one there, I think, is hunting rights. Who is out there hunting? I'm not a lawyer. I would argue that the landowner needs to be kept in the loop on who is entering the property. It's their property. But also, if there's some standing crops in the field and the landowner is having other people hunt, the farmer might not want their crops being run over or knocked down for someone to chase a deer, right? So we need to keep both parties in the loop here, but they just need to know what's going on. Farm bill programs, typically the landowner has really no thoughts, consideration, cares about the farm bill programs, but they might want to know. Management participation, does the landowner want to be considered a farmer for tax reasons, right? Certain people, especially retiring farmers, may want to be considered a farmer for tax reasons, just for tax planning. Partnership. Does the landowner want to be a partner in the farm? Is there a preferred farming practice, right? Do we want to do, you know, minimum tillage? Do we want to convert it to organic? If you want to, you need to talk with the farmer and make sure they're on board. If we want to do a no-till operation, that's different equipment. That's a different planter for most farmers. So they may not want to go buy a new planter just to plant your field. So you just need to have a conversation with the farmer. Improvements, typically this is tile or irrigation. If a farmer pays to tile a piece of ground, they're going to want a long-term lease to recapture that cost. If a landowner tiles a ground, they're probably going to want higher land rent to capture their costs. So kind of the two sides. And then a property map, I think that's important for where proper entrances like driveways to the field are, and just an outline of where is this field? Where is the property lines? Getting started is always kind of the hardest part when drafting a lease. This Ag Lease 101 website has sample leases. So aglease101.org, there's sample leases on there I think are helpful. It's a good starting point. You can always change some of the wording, but here's got a lot of the wording started for you already. And then Iowa State has some pretty good examples here as well. And this is what it looks like. There's the website. In the handout that I emailed everybody, these websites are listed. So I think it's good places to start. Writing down a lease is too simple not to do. It doesn't need to be a lawyer drafted lease. You can write this out on like a notebook piece of paper and say it's X amount of acres, this field, this parcel number, the start date, end date, have both parties sign it. It doesn't need to be complicated, but it's just so helpful when it's actually written down. Kind of been wrapping up here. There's only a few minutes left in my talk. But in this negotiation process, start with solid research. I've provided a lot of the county average rental rates. So this is the kind of solid research that I'm providing, but clarify your goals. I would argue as a landowner, if you want to have, long-term soil health and one farmer renting your parcel for 10, 20 years to make sure it's, properly fertilized and maintained, and always getting top dollar for land rent, I would argue are conflicting goals. So just keep in mind, what do you want to have happen with your farmland? You own it. What do you want it to look like moving forward? Communicate clearly. Communication is just key to everything. Make offers thoughtfully, showcase value, be flexible, put it in writing, review the lease, legal, have a lawyer look at it if desired, foster a strong relationship, review and adapt. From the farmer's point of view here, right, we want to make sure that what's their ability to um, cover these direct expenses per acre, and then what's that land quality versus rent rate. Most farmers are renting more than one parcel. What's the difference on these different parcels in terms of where their rental rates are? Financial position of the farm. I talked through that benchmark report about how, some farms lost $300 per acre last year. The other farms made $250 per acre. There's a wide range of financial strength in the farming industry. So what's your farm at? Other income generating possibilities. And then from the landowner's point of view, what's the ability for their costs and financial needs? A lot of landowners use this as supplemental retirement income, and it is not fair to the landowner to get well below market average land rental rates. I get phone calls every year from, recent widows or family members who are now taking over the farm, and the old lease, they were not getting fair compensation. That's not fair to the landowner. What's the strength of the tenant relationship? Have you been renting to the same farm family for 20 years and they've always paid on time, taken good care of the ground, and there's no issue on getting paid or in farm management? That's worth a lot as well as a landowner. Most landowners don't want to be finding a new farmer every year, every other year. That's a lot of time commitment on their half. Most farmers and landowners want this to be a long-term agreement. It's just we got to get treated fair on both sides. Quality of the agronomic care, and then lease options. These are other ways to restructure the lease, right? What's a long-term and a short-term lease? Maybe let's do a 1-year lease. Maybe we want to do a 10-year lease. You can write up a 10-year lease and have the price renegotiated every other year. There's different ways to write up a lease, and that can also fluctuate what this land rent looks like. And there's other things that we can include or change instead of the dollar amount as well, like adding clauses to the agreement. Maybe we want to have the farmer plow or snow in the winter. Maybe we want them to cut the ditches because they got a brush mower in the summertime, fixing fences. There's other things besides straight dollars that can be negotiated. And then the flexible lease talked about. Again, in wrapping up here, negotiation skills are important. Win-win is the ideal outcome, right? We want both sides happy at the end of the day. Writing it down, right? Writing this down is important. Prepare, engage, review. Using objective criteria, so using realistic, reliable data. I've talked heavily about the USDA statistics, the Finbin database. Don't be relying on this coffee shop talk where numbers get exaggerated, hyperbolized, not always reliable data that we hear in the coffee shop. These are the resources. These are all in the handout. So the University of Minnesota Extension website, the Finbin database, the USDA statistics, farmland sales, the crop productivity index, the cost of production, fair rent, and the lease examples. All helpful, free, easy to use resources for everybody on the call today. I want to thank everyone for listening. My contact information, both email and phone number on the screen here. Follow up with any future questions. Thank you.